Assalamu alaikum, everyone, and welcome to episode one of Wall Street to Bay Street, Sunday Chai with Sherry Portfolio Canada, where we recap the market events from the previous week and discuss some of the hot topics that are plaguing investors' minds. My name is Nadeem Mian.
And I'm Shamil. Get your chai ready and let's jump right in. Currently, my chai is in the microwave getting heated up, so I guess we're gonna have to wait a little bit. But this is gonna be a weekly show where we kind of go over how the market's doing, and Nadeem's gonna give some of his thoughts on how he sees the markets and what's hot in the market. So without further ado, let's get right into it. We've seen a lot of discussion in terms of oil prices and oil this week. So Nadeem, what are your thoughts on that?
So crude oil was up for the second week in a row, and it inched up close to about $70 WTI. Basically, for the week is up about 4%. Now, a lot of this is really kind of coming from expectations that North American summer is beginning. People will be driving and kind of traveling more, so we're starting to see that. And even globally, we've seen Brent crude prices also actually cross $70 for the first time in 2 years. So, these are pretty important kind of price points for oil, the $70 kind of being somewhat of a psychological and technical level. The main thing over here, what's going on with oil is that the vaccination and the drop in the COVID cases, especially in the US, has led to the market thinking that life is kind of getting back to normal. People will be, like I said, traveling again, and this is going to be happening in the next coming months, and hopefully for the next rest of the year. So that's kind of on the demand side. As far as the market is now thinking that demand should start to pick up. On the supply side, some of the news that we've seen, there's been a lot of bullish news flow in that department as well. We saw inventory drawdowns in the U.S. These were basically oil inventories, supplies that last year at this time were really high, have kind of been drawn down. So supply kind of has been reduced in the U.S. OPEC Plus did meet this week, and pretty much what they said was that they were confirming they continue to plan to raise production, but only gradually over the next 2 months. And this is really just implying that they're sticking to the current policy, and they do actually see demand globally starting to pick up. And the third thing that really, the oil markets were focusing on was the Iran nuclear deal, which in essence, if it were to get ratified, theoretically should bring supply to the market. In other words, if Iran is complying and some Iranian oil is hitting the market, that should help the supply department. But it is entering its sixth round of negotiation, so the timeline for that deal is not exactly certain. So these were just some of the bullish news flows that we saw this week.
Fantastic. That's some really insightful information. So I guess the next thing, to discuss would be, the unemployment statistics came out today. So what are your thoughts on that? Do you have any initial takeaways from kind of, reviewing that information?
So we got job numbers basically on both sides of the border in Canada and the US. They released them on Friday, and I would say we got different but similar stories on both ends. Starting first with the U.S. Department of Labor, they saw non-farm payrolls actually increase by 559,000 in the month of May. Now, although that's good in the sense that we've seen over 500,000 Americans kind of get back to work. This was below the estimate in terms of what some of the economists were expecting. The number out there was over about 612,000, something to that effect. So even though it was an up number, it was below the expectation. The unemployment rate did drop to 5.8% in the U.S. versus 6.1. We saw kind of gains in some of the sectors such as hospitality, which is basically hotels. So a positive sign there in terms of people kind of getting back to normal in terms of traveling. But overall, the number really kind of speaks to the signs of the economy somewhat getting back to normal. Now, on north of the border in Canada, StatsCan released their numbers on the same day, on Friday, and it was a little bit of a different story in the sense that in Canada we saw 68,000 jobs lost. The estimate out there was that we were going to lose about 25,000, so it did come actually worse than expected. This was the second month in a row that Canada has seen job losses, and resulting with the unemployment rate going from 8.2 to 8.2%. Previously, it was at 8.1%. So the reason for this, I guess, jobs report number was really kind of the third wave of COVID that specifically impacted Canada, and the lockdowns that were primarily in Ontario and Quebec in the month of May. So that's kind of the story. With the unemployment numbers, I would say that job numbers is something that the U.S. central banks, like the U.S. Federal Reserve and Bank of Canada, they do keep a keen eye on this thing to formulate their monetary policy. In general, the market reaction to these numbers was positive. Like the markets were actually up on the day that they released them, and the reason for that is, there is a fear that if the economy is, let's just say, heating up too much, or if it's growing too fast, that the central banks would start tightening their policies, increasing rates. And so with the job numbers kind of not being as great, the market's kind of probably looking at this saying, you know what, it looks like the central banks won't be that apt to, or that I should say, what's the word I'm looking for? They won't be that in a rush to change their policy to a more tightening stance, and that was somewhat of a bullish sign for stocks.
Absolutely. And, kind of piggybacking off that, I guess, one of the main things, and, our clients talk about is the US and Canadian, exchange rate. So, give us your thoughts here. What are your thoughts on kind of how the rate's been going, kind of how it's been trending? Do you have anything to say about that?
Yeah, sure. I mean, actually, oil and, monetary policy has a lot to do with what's happening in the currency markets. Specifically in Canada. So what we've seen with the loonie in here in Canada is that the loonie has been at its highest level since 2015, and it's been on this tremendous run since coming off the low back in March of 2020, during the pretty much at the height of the pandemic, when one Canadian dollar was worth 0.69, so basically 69 cents US. So what that really means is that today we're looking at the Canadian dollar being at 83 cents. So we've seen this run up, and there's a couple of things here. Number one, when the pandemic happened, there was kind of this this flock to safety where the US dollar tends to do well in bad times, and that's what happened. But really, the Canadian dollar is regarded as a petrocurrency. That's somewhat of a label that the loonie is tagged with, and what that means is that it is tied to like oil, for example. And as I previously mentioned, oil has been on a nice run, and it's also being supported by higher commodity prices. And so what we've seen copper prices, steel prices, and other metal prices, doing quite well over the past 12 months. And because Canada is a net exporter of oil and commodities, that's definitely a bullish. That's definitely bullish for the loonie.
Perfect. Again, that's some interesting information. I guess the last topic we kind of have on the agenda, and I'm sure this is going to excite the viewers quite a bit. We've seen a lot of volatility, with cryptocurrencies such as Dogecoin, Bitcoin, and also certain securities such as, some meme stocks like AMC. A lot of volatility with those. And, I was kind of wondering what your thoughts were in terms of, how they're doing and kind of what the expectations are for them.
Yeah. So, I mean, first off, we're not here to recommend any stocks, such as any meme stocks or anything of that sort, or even, crypto. But what we will say is that, I mean, this just kind of speaks to maybe the appetite of what's going on out in the market, and that's really what it is. So, for example, the meme stocks is just speaking to how the retail market is being so active in investing, which is kind of cool, I guess, right? Where previously, the market's been dominated by institutional investors, but it has created a lot of volatility. And we've seen that also in the crypto market. I think, again, not trying to formulate any opinion on a meme stock or a crypto stock, but basically we saw this tremendous run up in crypto, and now we've seen this severe correction in crypto. And I think whether you're talking about crypto or any asset classes, you do see patterns of things going higher and then subsequently correcting, that like we've seen right now. And it really is kind of being driven by A lot of it is basically by social media, Reddit, and all that other stuff. Like today, for example, I should say on Friday, Elon Musk did shoot out a tweet on Bitcoin, and it did cause Bitcoin to sell, or at least that's what the excuse was given. Same thing when it comes to these meme stocks. It's been quite a wild ride, but the only thing I can really comment and say on that is that it just speaks to some of the volatility that's out there in the market, and some of the new investors that we're starting to see.
Yeah, it's definitely leading to some change, and it's really exciting to see what happens going forward. But yeah, I mean, that's pretty much it for today. This was kind of our first episode. So, we really hope you enjoyed it. And if you do have any other questions that you'd like to see answered on here, or any topics you'd like to see myself and Nadim discuss, feel free to leave them in our comments or shoot us a direct message. To book an appointment with myself or Nadim, click on the link below. And if you haven't already, we did release a new app on the App Store, on the Apple App Store. And lastly, please remember to like, follow, subscribe, and we'll see you next week on Sunday Chai with Sharia Portfolio Canada. And I think my chai just came in from the microwave. So I'll see you guys later.
Welcome.
Nadeem Mian, Portfolio Manager, registered as an advising representative, and Shamil Devji, Financial Advisor, registered as a dealing representative with Sharia Portfolio Canada Inc., a portfolio manager registered in the provinces of Ontario, British Columbia, and Alberta. Their opinions and statements expressed in this show are their personal opinions and do not necessarily reflect those of Sharia Portfolio. They are effective as of the date of this broadcast only and are subject to change. This discussion is for general information purposes only and is not investment advice.